What's up everyone, it's Matt and we have some big news. The Fed has just pivoted like a ballerina on roller skates, trying to find the perfect balance between interest rates and inflation. I'm so sorry, that joke was from ChatGPT. But anyways, yes, after over a year of straight rising interest rates, the Fed has finally decided to pause their interest rate hikes, which means that inflation is finally slowing down, which means that we are entering a brand new bull market and you're about to get rich. Just kidding. That's not exactly the case, but it does mean that things are looking a lot better than they did a few months ago. The markets are turning green and things are starting to look up. So grab yourself an iced coffee, sit back and relax, and let's talk about how we can put you in the right position to take advantage of the new opportunities and make some money off of the news. But quickly, before we do that, if you could click that red subscribe button and the like button as well, as it really helps out the channel and the algorithm. Thank you so much. Now, let's get into it. Alright, so the Fed has been trying to counter this record high inflation that we've been having for over a year now, and they've been doing everything they can to do so. And it's finally worked. Inflation was recorded at 4% year over year in May, which is down from the 4.9% that we saw in April. Gas and groceries were the two main drivers of this lower number, while numbers like rents are still continuing to climb. But what's so impressive about this number is that it's the smallest yearly increase since March of 2021. And when you break it down even smaller to a month-by-month basis, prices only rose by 0.1%, which is crazy low. Now, we are still a ways away from the Fed's goal of 2% inflation, but as Powell said in the meeting,
"We understand the hardship that high inflation is causing, and we remain strongly committed to bring inflation back down to our 2% goal."
But even so, things are looking a lot better for the economy and the markets. In the meeting, the Fed actually revealed that they have officially paused their 14-month aggressive rate hiking cycle. But this doesn't mean we are totally out of the clear of any future rate hikes. In the meeting, Jerome Powell did say that we can expect 2 more rate hikes in 2023 as the Fed continues to try and combat core inflation. So that would put the benchmark rate at about 5.1%, which is the highest it's been in 16 years. So you might be thinking, okay, that's cool, but how do I make some money off of this? And don't worry, I got you. To understand how we can make money off of interest rate pauses, we have to first understand what pausing interest rates means. When the Fed raises interest rates, borrowing money becomes more expensive, which means businesses and people have less money to spend, and it slows down economic growth. But when interest rates are paused or lowered, it means that people and businesses can borrow more money and spend more money, which stimulates the economy and pushes up the markets in tandem. So basically, high interest rates means low stocks and low interest rates means high stocks. Simple enough, right? So with the Fed now pausing interest rates, can you guess what that means for the economy? You got it. Green, green, and green. Because of the pause in interest rates, the economy and stock market are going to have a lot more money flowing into them. So if you want to be able to take advantage of all the opportunities that are arising, there's a couple things that you can do to set yourself up for success. If you want to make some money, you have to expose yourself to the market as much as you can. And there's a couple tips I can give you to be able to do this. The first is save your money. Save as much income as you can so that way you have the cash to throw at new opportunities as they arise. The second is to continue investing. Just because the market goes green doesn't mean that you should stop buying stocks. It just means that you should continue with your investing strategy regardless of what price the assets are at. And if you don't have an investing strategy, then may I introduce you to my personal favorite, dollar cost averaging. Dollar cost averaging is just to invest a certain amount of money at set intervals of time. For example, setting aside $100 every week to buy an S&P index fund regardless of the price that it's at. For myself personally, I do this with a couple ETFs and index funds. That way I'm able to capture the gains of the entire market and also minimize my downside. Overall, the latest Fed meeting is extremely positive as inflation is slowing and the economy and stock market are looking like they're in a much better place moving forward. So there you have it. Hopefully you enjoyed this video, and if you did, make sure to subscribe and like the video as it really helps out the channel. And with that, I will see you guys next time.